On to Amar Singh. He's looking out the fallout. Last year's devastating wildfires.
Thank you, Chris. We have a lot to talk about with this, and it has a lot to do with the insurance premiums that people are experiencing that are going up after the Woolsey fire. They're going up as much as 4 times, and in some cases, those insurance premiums aren't even being renewed. Our Lydia Pantazis has a story of one such person.
People are struggling to rebuild after last year's devastating wildfires. I'm Lydia Pantazis in Malibu. I'll show you how the fires are affecting people whose homes were untouched by the flames. Crews are getting ready for the 38th annual chili cook-off in Malibu. Paul Grisanti remembers when it first started. He's a longtime Malibu resident and was even part of the planning committee as part of the Kiwanis Club when it first started.
It's a summer tradition here in Malibu.
Now the Boys and Girls Club handles the event, but Paul still likes to come each year and support his community.
It's a wonderful place for people to come back after the summer, run into the people they haven't seen in 6 months or a year.
But this will be the first chili cook-off since fires devastated Malibu. Many are still rebuilding after their homes were destroyed. Paul has 2 homes in Malibu, both untouched, but he is still feeling the effects of the fire. That's because the insurance on a rental property he owns just got canceled.
We got notice about 2 months ago that the insurance company that we had was not interested in renewing with us and that we would need to find another company.
Once he found another company to insure his home, the cost skyrocketed. Paul and his wife have been paying about $3,970 a year for fire insurance. Now they'll be paying just under $16,000 a year.
It's an extra $1,000 a month, which of course makes the income property a little less productive than we would have hoped.
But Paul is not alone. New data collected by the Department of Insurance shows fire insurance is becoming harder to find for those in high wildfire risk areas as a result of recent wildfires, which means higher rates are being dropped altogether, is something many of his Malibu neighbors should expect to see, whether their homes were damaged by the fire or not.
Thanks for that report, Lydia. And joining us now with some perspective and solutions for homeowners is Jamie Court, president of the nonprofit consumer advocacy group Consumer Watchdog. Jamie, thank you so much for joining us. And for the homeowners who are feeling the squeeze, seeing their premiums in some cases quadruple, or even seeing their policies not being renewed, most usefully, what can they do?
Look, man, it's really tough. You can shop around. What you should know is there's an option. It's called the California Fair Plan. It is the insurer of last resort. It will be there for you. But if you have to go to it, you should know you could face and probably would face higher premiums. And in some cases, you might actually have fewer benefits. You might not be able to get as much coverage. So one thing is you want to try to stay in the private insurance market if you can. If not, you can get the Fair Plan. There are ways when you shop to figure out whether insurance companies are going to give you a break if you do fire safe your home, if you do take some precautions. You should try to talk to your insurance companies and your insurance brokers about that. Unfortunately, though, there are too few consumer protections, and we got to work on getting some more.
Right now, California is no stranger to skyrocketing premiums in the wake of natural disasters in 1994. We saw something similar with earthquake insurance at the Northridge earthquake. How would a situation like that compare to what we're seeing today with wildfires?
Well, it's interesting. In Northridge, the homeowners insurers dumped the entire market, and now we have a state-run earthquake insurance pool called the CEA. There's only one option, although the private market is getting back in the business because we haven't had an earthquake in a while. We haven't quite got there with the homeowners market and the fire insurance yet. What the insurance commissioner really needs to do is start to force tighter rules on these companies. The companies should not be able to charge you an awful lot if you've taken precautions to fire safe your home in an in a fire-prone area. The big premium increases we are seeing are in the high-risk fire areas only. The average premiums across the state is only about 6.9%. But the problem is when there's an average premium of 6.9%, there are people in the high-risk fire areas who are seeing 100 or 200%. And we should make sure that the people who are seeing the biggest premium hikes are if they're taking precautions to fire safe their home, what we call harden their home,
right,
they should be able to get a break, just like good drivers do with auto insurance. But that's going to take the insurance commissioner digging in and going tough on the insurance companies. We haven't seen that yet. We're waiting.
Right. Now, in a quick word, Jamie, I mean, obviously they're in the business of making profits. For the insurance agencies and the industries, where do they go next? What's next for them?
Look, man, they still want to sell homeowners insurance. They just don't want to sell it to people in what they call high fire risk area. So they're doing everything they can to keep the rest of the market, but not to sell to people who live in places where there are fires. And so if you have policies that, for instance, are both auto and home and, you know, maybe boat, and it's all with one company and you get a discount, you might want to tell that company, if you drop my homeowner's insurance, I'm not going to keep the rest of my coverage with you.
Right.
So consumers need to push back.
Right. It's a tight spot for them and, of course, for the homeowners as well. Thank you so much for sharing that perspective. We're going to get more into this later. Thank you so much, Jamie. Appreciate it.